VOO ETF. Investing for beginners. Why it's a smart choice. Imagine this. You invest $10,000 today, do nothing for 20 years, and wake up to see it has more than tripled in value. Sounds like a dream, right? Well, that's exactly what has happened with VOO, the Vanguard S&P 500 ETF, one of the most powerful yet simplest investments you can make. But why is VOO such a smart choice for beginners? How does it work? And how can you start investing today? Stick with me because by the end of this video, you'll have all the answers, plus a strategy to grow your wealth with minimal effort. Let's dive in. First things first, what exactly is VOO? VOO is an ETF, exchange-traded fund, that tracks the S&P 500, meaning when you invest in VOO, you're essentially investing in 500 of the largest companies in the U.S. Think Apple, Microsoft, Amazon, Tesla, and Google, all in one single investment. But here's what makes it so powerful. The S&P 500 has historically returned about 10% annually for the past century. It includes companies that drive the global economy. And unlike individual stocks, it's diversified, meaning less risk and more stability. Let's say you invest $5,000 in VOO today and add just $200 per month. At an average 10% return, in 10 years, you'd have $44,000. In 20 years, $150,000. And in 30 years, over $500,000. That's the magic of compounding. Your money grows on autopilot without needing to time the market or pick the next Tesla. But wait. What if the market crashes? That brings us to our next point. A lot of beginners ask, what if the stock market crashes? Let me tell you a story. Back in 2008, during the financial crisis, the S&P 500 dropped by over 50%. People panicked, but those who stayed invested, they saw their money triple within the next decade. And here's a crazy stat. If you had invested just $1,000 in the S&P 500 in 1990, today you'd have over $23,000, even after multiple recessions and crashes. The key? Stay invested. Don't panic. Time in the market beats timing the market. You might be thinking, there are so many ETFs out there. Why VOO? Here's why VOO stands out. Ultra-low fees. VOO's expense ratio is just 0.03%, meaning for every $10,000 invested, you pay only $3 per year in fees. Compare that to actively managed funds, which can charge 100x more. Consistent returns. VOO has delivered 10% average annual growth, making it one of the safest long-term bets. Instant diversification. Instead of picking stocks, VOO gives you exposure to 500 companies at once. Warren Buffett's favorite investment. Even billionaire Warren Buffett recommends index investing over stock picking. He once said, "A low-cost index fund is the best investment most people can make." Now that you know why VOO is so powerful, how do you start? Open a brokerage account. Popular platforms like Vanguard, Fidelity, and Robinhood allow you to buy VOO in minutes. Fund your account. Even starting with $50 or $100 is enough. Buy VOO, search for VOO, hit buy, and you're officially an investor. Automate your investing. Set up automatic contributions to dollar cost average your way to wealth. And here's a pro tip. If you're investing for retirement, consider using a Roth IRA. Your gains will be 100% tax-free. Let's recap. VOO gives you exposure to the 500 biggest companies in the U.S. It has historically returned around 10% per year. It's one of the safest, easiest, and lowest-cost ways to invest. And the best part? You don't need to be an expert. Just buy, hold, and let compounding do the work. So, are you ready to start investing? Drop a yes in the comments if you're getting started today, or if you're already invested, tell me how long you've been holding VOO. And before you go, smash that like button, subscribe for more smart investing tips, and I'll see you in the next video.